Hello, chart watchers, and welcome to this Tuesday, June 18th, 2019 Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Taking a look at the action today, we've got the Dow Jones Industrial Average currently up 324 points, the S&P 500 up 29, the NASDAQ up 118, the Russell 2000 up 17, trying to get back through its 50-day moving average. 10-year Treasury yield back down to that 203 level earlier today. That actually was the lowest level that we've seen in multiple years. We did go down just below the level we saw back in 2017. So far, we're trying to bounce back off of that low, 2.05%, and it is coming on a day when the Fed has begun their meeting. Volatility index drifting lower, although it is back up off of the lows of the day. Currently, it is flat, actually 15.35. Technology and industrials leading the advance to the upside. Always good to see aggressive areas leading on a big day like today. Renewable energy, another huge move to the upside, breaking out above the high that it saw a week ago. And semiconductors coming back to life. A breakout above that 3,400, 3,410 area would be very bullish, but still the group having a very strong day, up more than 4%. Facebook in the news with its cryptocurrency. Well, we'll talk about it in just a minute, but a huge gap up yesterday. There was a lot of anticipation. You can see Facebook having a huge day yesterday, gapped up this morning. Still needs to clear the high that we saw back at the end of April. Has reversed back off of this 194 level where it opened today. I think this is a stock, though, that has been outperforming the internet space and is poised to make that breakout, but we need to see it first. And then in the semiconductor space, there are just a host of companies performing extremely well today. You can see Micron, Xilinx, NVIDIA, all coming off of their recent lows, trying to make breakouts above earlier highs in June. And then Boeing having a big day today. This is a stock that really struggled to get through that 360 area. I thought that was an overhead resistance area. You've also can see that moving average right around 360 as well. So we're getting through both on heavy volume. So far, Boeing looking really good today. Okay, Erin, big day today. I mean, we were kind of seeing the market, and I think you mentioned it yesterday, a little flag formation, and we've been seeing it over the last, really in June. We had the big move up, sideways consolidation, and now we're getting a breakout out of the flag. That's pretty bullish, at least in the near term, wouldn't you say?
Oh, absolutely. And we were talking about looking at that market overview on our member homepage, and it is all green with almost everything up over 1%. So exciting day in the market today.
Yes, it is. It's an exciting day here at Market Watchers Live as well, because we have Danielle Shay back. And always a pleasure to have you on the show, Danielle. How have you been?
Thank you. I've been great. How about yourself?
I am doing great. What do you think of this market today? We're finally having a really nice day after the consolidation we've seen over the last week or so.
Yes, I like it. I mean, I think especially with the Fed meeting, and additionally, we have monthly options expiration this week, and the market does tend to go a little bit higher during that week. So,
yeah. Do you? I know, and you're going to be talking about later how you approach the market and options and so forth. But when it's a big week like this with the Fed, and knowing the impact that what the Fed says, I mean, they could just change a word in their policy statement and have a huge impact in the market. What do you do as an options trader when you're coming into a big report like this? Do you just sit back and wait?
So what I like to do is focus on key relative strength names that typically move upwards when the market is trading higher. And then, regarding the volatility, I just try to keep my position size low.
Makes sense. All right. Well, I know everyone's going to be sitting on the edge of their seats waiting for your presentation in about 15 minutes. So stick around with us and we'll get back to you in just a bit.
Okay.
Sounds good. All right, Erin, we got a busy day. What do we got going?
Oh, I know. This is going to be a busy week as well. Greg Harmon is going to be with us tomorrow. Julius de Kempener is going to be with us on Thursday. Next week, we'll have a roundtable on pop culture stocks. Brian Shannon will be in. And following that, on Thursday, the 27th, Dan Russo will be back with us. So exciting couple of weeks coming up on Market Watchers Live. Today, we have a great show. Obviously, we just introduced Danielle, so she will be starting off after our headlines and news, followed by the 10 and 10. Our first symbol will be Twilio, TWLO. We will then do Inside the Lines, and we'll follow that with chart breakouts, which we figured would be a great segment given the status of the market right now. But let's go ahead and get started and learn more about the status of the market with technical news and headlines.
All right, sounds good. First, you can see on your screen key economic reports. As just talking about, the FOMC meeting began today, and it will culminate tomorrow afternoon with a policy statement by the Fed at 2 p.m. This one's going to be really interesting because I think everybody is expecting that the Fed is going to change its stance, maybe not the interest rate, but the stance, and start talking more about, instead of having patience, I think maybe starting to give the market more of a, well, maybe not a certainty, but that they are looking to lower rates. And so I think that could be what the market is anticipating with this strength today. We'll see whether or not we get it later in the day. The Fed does have a history, at least this Fed has a fairly short-term history of disappointing from time to time. So we'll see what comes up with that. May housing starts and building permits, as you can see, both came in better than expected this morning. And as we take a look at what is going on in the Treasury market, the 10-year Treasury yield continues to drop. So we are down. We are off the earlier low. I think we did get down to about 2.03% earlier this morning. But you can see this move down has been very swift since hitting that 3.25% high back in October and testing it in November of 2018. It has been a steady move to the downside all the way back down to 2.06%, which is where we stand now. And this is testing that September low. Pretty interesting how we came down right to that low as we have a very important Fed meeting today and tomorrow. I think depending on what the Fed has to say, I think that will dictate a couple things here. Number one, maybe because there's been so much buying into the treasuries as we move into this Fed report or Fed announcement, I think there could be a sell-off after the news, which then would send the yields higher. That's what I would be expecting. Again, we'll see what happens later tomorrow when the Fed announcement comes out. All right, earnings, not a whole lot of earnings. There was a smaller company, ticker symbol is PSN, Parsons Corp, did beat on their bottom line. I'm not sure if that's comparable. This is the first earnings report for Parsons since going public in second week of May. So it was a pretty strong report, but again, I'm not sure if those numbers are comparable. After the bell today, we're going to get Adobe, which is a big software company. Software trying to make another breakout today, so that'll be an interesting report to watch after the bell. Jabil Circuits and Lazy Boy also reporting after the bell. Let's take a look at that PSN chart first. I don't like to trade stocks when they're this new, but there's still, I guess, some key levels. Let me actually take it off of this. I don't think with a 1 month chart we really need to worry too much with the relative strength. But when I look at this, I would simply be watching the recent high. Maybe after this first push down here or up to the upside, we had a pullback to about 30.60. That's kind of the range maybe that I would look at. But again, I'm not somebody. I don't really pay too much attention to these fairly new companies until they've had a little bit more history, a little more trading history. But that's maybe a $2.50, $3 range that you can keep an eye on in the near term. As far as Adobe goes, let's pull this one up because this is going to be a big report coming up in the software space. And this one I will look at on a relative basis because Adobe, even though it's been in this uptrend, looks really nice. Here we've got the software group trying to make a breakout today. And you can see Adobe still about 15 points below that level. So on a relative basis, you can see that Adobe, relative to software, is actually trading at a 52-week low. So little, something to think about. If we go back further, Adobe was a great performer on a relative basis. But this last year, not so much. So is this leading to maybe some disappointment? I don't know. We'll find out at 4 o'clock or after 4 o'clock Eastern today. So Adobe struggling a bit on a relative basis anyway. Let's look at that software group. And here you can see we are trying to get this breakout. This could be a breakout today, or if we get a failure and after the Fed comes through with their announcement, perhaps we get a pullback. If we do, my guess is that we're probably going to either be in the sideways consolidation, which is a continuation pattern off of a nice uptrend, or maybe we pull back, put in a higher low from that low that we saw to open June, and that could result in perhaps at some point down the road, maybe off of an uptrend, some sort of an ascending triangle where you've got, this is point A in an A, B, C, D, E ascending triangle. This is A, B, C, whatever we pull back to could be D. And then finally, E would be the breakout above that 2,700 level or just above 2,700. So software, I think, is in a great pattern, continues to be one of the leaders in the market and a space that I would continue to watch closely. The home building group, of course, we had the news out this morning with the housing starts and the building permits. This is another group that's been very strong. We did try to get a breakout at the end of last week. Yesterday, we pulled back a bit. Today as well. I think that rising 20-day moving average is going to hold. And this is one of those areas that you do want to be careful with going into the Fed announcement tomorrow. Because if all of a sudden we get a reversal back up in the Treasury yields, that could be a catalyst in the near term to generate some selling in this area. So we've been moving up in home builders, but remember, we've been seeing the 10-year Treasury yield falling throughout this period. So a quick little bump in Treasury yields could send the home construction group back. But looking at a longer term chart, if I get into a weekly chart, I think home builders look great as long as we stay above this 20-week moving average. So there's plenty of room from a long-term perspective for this group to pull back and still be fine on a relative basis. Looking at the semiconductors, and I'm going to keep this weekly chart up because I think it's important to know that we are still in an uptrend. I know semiconductors had a rough end of April and most of May, but when you look at the pattern, you've got higher highs, higher lows. Now, these were, I would say, short-term lows, but I think the longer-term chart, this pullback, we've gone back up, put in a new high. I think as long as that December low holds, we remain in an uptrend in the semiconductors. So PPO back to the center line, having a really nice day today. If we could get back up and clear the highs that we saw last week, just above 3,400, I think that would be a really bullish sign for a group that tends to move very strongly. All right, we are going to go into the scooter mover of the day. And this scooter mover is right on top here in the mid-cap area. Keep in mind that scooters are just another form of relative strength. This is keeping track of how stocks are performing relative to their market capitalization peers. So Momo relative to the mid-cap stocks is really jumping today. The reason I wanted to point this out is when we look at the chart, it came back up above its 20-day moving average recently to open June, pulled back, held that 20-day, and is now trying to make another breakout. And look at the volume pushing higher. So it's not just about the fact that the scooter mover, that it's a scooter mover and it's, on the top of that mid-cap list, but it also looks pretty good technically as we see that PPO bullish crossover through the center line. And that is your scooter mover of the day.
All right, well, it's time for the upgrades and downgrades. So let's go ahead and get started with that right away. All right, our first one is going to be Bank of America. And Bank of America was upgraded today by BMO Capital from a market perform to outperform. And they have raised their target. Let's go ahead and look at that. Horizontal. They've raised their target to $37. So let's go find $37 here. I'm going to just move this. And this will give us a really good feel for $37 up here. All right, so they're looking for a market outperform, but as we can see, we're still in a zone here. I would call this a trading zone right here. Look at, we've been in this zone for quite some time. We did dip down during the correction, bear market. So we did see that fall. But at this point, we're still in this range. I think that it's good news. Let me get this bigger. We've got a PMO buy signal that just came in. And you can see on balance volume, it's rather flat, but it certainly isn't in decline. And I kind of can spot right here a possible flag formation right there. There you go. And if you did the measurement, boy, that would take you right on up to test these highs back here from, and if we look right there, you can see down on the bottom, it tells me what date exactly that we got that high, March 12th, 2018. All right, next one up is going to be, let's see, who do we have here? Blue, yes, blue. Move some things out of the way so I can see my screen. All right, there we go. Maxim Group upgraded Bluebird Bio, that is, from a hold to a buy, and they have changed their target to 160. So let's go over here and find 160 right there. So I'll just put my horizontal line there. So that's what they're looking for as a price target. Well, of course, it's just a little bit below that high that we saw back here on April 3rd, 2019. And let's go ahead. I'm going to put the support right now, right in here. So, and I think we can look at this declining tops trend line as well. Just drag that down there. And we have not broken out from that declining trend just yet. But I'm looking at the PMO. It is on a buy signal. We can even, let's see if I can get that a little bit bigger. Right there. So you can see we're on that buy signal, and the PMO is moving back up from oversold territory. Next one up is going to be Sunrun. I actually own this, so I'm pretty happy today. A nice big move, 7.5% currently. One of the things I did notice when I was going through the upgrades and downgrades is that the solar group, the solar equipment group, which is having a great day, as Tom said, had a lot of upgrades today. So it could be a little bit of a contributor there. But Goldman upgraded Sunrun from a neutral to a buy, and $20 is their target. So I'm going to make this a little bit bigger here and move to the horizontal line. $20 is right about there. You can see a really nice breakout going on from overhead resistance that we saw back here in mid-April. And the upside target, they're giving it $20. I can certainly see that at this point. Look at the PMO has just had the crossover buy. It is above the zero line, which is something I always like to see. Sunrun, I think, still looks really good. I'm certainly going to continue owning it. And yes, despite the big move, I don't think I'm going to pull back anything just because you do have that buy signal in place. All right, let's start looking at some downgrades. Intercontinental Hotels Group was downgraded by Barclays today from an equal weight to an underweight. They did not give us a price target. Let's go ahead. I'm going to make this a little bit bigger. I know the first thing everybody might say, and I'm going to get my, well, I guess let's do the trend line here. I know that what you might consider is this, what looks like a double bottom. Right there is a bottom, and right there is a bottom. But you know, double bottoms are reversal patterns, and they need to come off of a decline, and we're not seeing a decline here. We do have this gap. Here we go, that we got back. All right, and we're holding on to it, and there's our high. And we've popped up above it intraday, but we've not been able to actually close above it at this point. So I would be wanting to see that breakout. The PMO is starting to turn over, but it's still on a buy signal. So it's really hard for me to get too excited about a downgrade right now when I think that the stock still looks pretty healthy. Next one up is KB Homes. And KB Homes was downgraded by Raymond James from a market perform to an underperform. I don't think there's too much to look at on this chart, to be honest, but here's your support level. And there is, of course, overhead resistance. Bring this chart down so we can see it a little better there. I have to say, I do enjoy the new ACP tool. I like being able to look at this long-term, short-term. Look at this cup shape. It's a really long, big cup shape, and we're putting in a handle, it looks like, back here. So that, to me, is a positive. Now, given the look of this PMO on a sell signal and continuing down lower, this might not be quite the time. to get in. Maybe you want to wait until it gets even closer to the support area and then see if it can hold. But it is on a downgrade. I don't think it looks horrible right now, but certainly, it's a downgraded. I always pay a little bit of attention to that. Oracle was downgraded by Macquarie from an outperform to a neutral, and it went from a $56 target to a $55 target. Well, there's your target right here. We've already been above that. This would be a pretty interesting level of support, but I probably would go with looking at this low back here. However, because that's there, that's something that we could see as far as a support level that might hold. I also see a flag on this one. There you go. There's your pole. There is the flag. And again, what you want to do is measurements, and that will tell you how high you should expect it to go. So the measurement of this flag would take us, it would take us well up and above $59 if that's truly what happens. It's got a decent OBV. Look at the PMO just came in with a buy signal and oversold territory. Watch it, see if you can get that breakout. You might get to take it on a run just up to the overhead resistance, something to consider. And that's all I have for upgrades and downgrades. Here are the key downgrades and upgrades I did, and you can look at those later in the MarketWatchers Live recap. We will be right back with guest Danielle Shay. All right, we are back with our guest, Danielle Shay. Most of you who have seen her here on MarketWatchers Live knows that she specializes in options trading. Tom and I aren't ones to cover that too much, so we always enjoy having you on, Danielle. Welcome back to the show. What have you got for us today?
Thank you. All right, let me go ahead and get my screen share going. Chart's good?
Looks good.
All right. So very similar to what y'all were talking about in the beginning, what I'm going to be talking about today is finding Phoenix. So this is my method that I use to identify relative strength names in the market. And in options trading, it's particularly important to catch those as they turn up and down. So for example, right after a market pullback, that is when I'm looking for Phoenix, those strong relative strength names, to jump on those as they shift upwards in a quick movement. So this is a little bit of what we're going to be talking about today. Let's see. So 5-step stock picking process, a couple of the key industry groups that I'm focused on. How do I identify those on a social level and then also on a technical level? And like you said, we're going to get back to the options trading. So I'll talk a little bit about the different type of options trades that I do. So I have been on here a couple times, but I just wanted to introduce myself again. So my name is Danielle Shay. I'm the Director of Options at Simpler Trading. I'm a commentator. You can see a couple of the different appearances that I've had, and I'm primarily an aggressive directional swing trader in the options market, but I do trade stocks and futures as well. So here's just a little bit about my journey. I used to be a teacher. Here's a picture of me teaching elementary school in Costa Rica. And now at this point, I'm a stock market analyst. So I love teaching. I've always been a teacher. I'm still a teacher. And that's what I'm here to do today. So let's go ahead and get into the Phoenix Folio. The Phoenix Folio is essentially my baskets of hand-picked stock list, and I kind of shift through them depending on what the overall market is doing. So why do I call them Phoenix, and why do I call it the Phoenix Folio? So similar to what we talked about earlier, the phoenix is the bird that rises from the ashes, right? So whenever the market pulls back, slight pullback, or even a more significant correction like in December, what I'm looking for are those key stocks that are going to immediately rise out of the ashes, because those are the ones that you want to jump on first. So I like to call them Phoenix. Of course, like Warren Buffett, this is one of my favorite quotes, you really have to be greedy when others are fearful, and fearful when others are greedy. So that is the goal of the Phoenix system. So, like I said, you want to be able to catch the stocks that are rising as they're rising and falling as they're falling, but you have to pick the strongest ones to the upside and the weakest to the downside. So essentially right here, this is going to be my grid for how I go about finding Phoenix. I always start here with the big picture outlook. I always look at the S&P, NASDAQ, the Dow, and the Russell futures to determine overall price action. With Phoenix, what I like to do is focus on the indexes that are the strongest. So for example, if the NASDAQ and the S&P are rallying, then I focus there. If in fact you have the Russell, then I'll focus in that area. And so I just basically start here and then I go on down. So depending on what I'm trying to do in the market that day or that week, I determine how aggressive I want to be. So oftentimes I will just go ahead and stick with ETFs. I'll just add them to my long stock portfolio, or I'll trade options on ETFs. But sometimes when the market is really strong, then I like to stick with the Phoenix flyers, which are the hot industries that typically are going to move at a greater than what the overall market's doing. So like you were talking about the semiconductors earlier, that is one area that I like to focus on when we have a strong bullish market. Cloud stocks as well, these are very hot. They can be very volatile, but in the options market, that's really what we need to capitalize on long calls. And then I also have some handcrafted lists that I've come up with that are kind of the social aspect. I think I need a name for this, but essentially what it is I look at the ways in which generations are spending their money, right? Especially looking at millennials. Everyone loves to hate millennials. But if you think about, okay, what do millennials blow their money on? That is where that list comes from. So we're going to get a little bit more into that. But essentially what I do is I start at the top, look at the strongest indexes and narrow it down to an individual sector or industry group. Look at money flow. So I'm trying to pick the strongest of the bunch within that individual group. And then I pick the stock at the very end. And then I'll either trade it with options or, whatever I feel like at that moment in time. So these are a couple of the main groups within my Phoenix folio, and I'll talk a little bit more about each one. But like I was saying, I shift through these different lists depending on what the market is doing.
Hey, Danielle.
So, yes?
Question for you. Because that was interesting. I kind of do the same thing, except I don't do options, but I try to go that, take that top-down approach. Do you ever get swayed by the news? I mean, it's hard sometimes as an options trader or momentum trader when you see some of the stocks that are making big moves. Like just recently, for instance, the cryptocurrency with Facebook, of course, Bitcoin, the fund has been going up. Do you ever find yourself looking, or maybe even like the marijuana stocks a while back? Do you ever find yourself jumping in to some of those because they're moving so rapidly? Or do you literally try to stick 100% to the list you just showed?
Oh, definitely. So the main time that I like news-related movements are when the stock has a lot of high short interest. So those for me are, especially on earnings. So for example, if a stock has 15 to 20% high short interest and then it gaps up on an earnings report first thing in the morning, that is pretty much like a present first thing when I wake up. So MDB, for example, I think it was last week or the week before, I could show you a chart. But something like that, yes, I will definitely day trade on news, but it has to do with the overall technical setup.
Okay. Yeah, that makes sense. I think they just came out, MDB, that was MongoDB. Is that the software company that just reported really strong results?
Yes. And so, for example, I mean, that one, it had, I think it was about 15% high short interest. And that can really cause a short squeeze first thing in the morning. And for me as a short-term trader, that is a lot of fun. So let me see if I can get the screen up there and I'll show you. But other than that, a lot of the times I look to fade a news-related movement. It just kind of depends what the chart looks like.
I know MDB, and I mean, you were talking about the hot areas of the market. And of course, there hasn't really been too many areas hotter than software over the course of the last couple of years, and probably even going back the last 5-6 years. But I'm sure this one came across your screen probably from that software group.
Yes. Yes. And so, for example, this move right here in the options market, I mean, that was a really nice movement. And I mean, you're not buying the stock for a buy and hold for a breakout, but just trading it for a few days in the options market is a pretty nice movement.
Okay. Thank you.
Yes. All right. So essentially I start with the top down, like I said, and my grandma loves it list is a place where I have to start every single day. Essentially what this list is companies that everyone knows and loves, really common, popular names. But the reason why they're compiled together in this list is because they're some of the top weighted and market leaders from a variety of different sectors. And so when you look at all of them at the same time, you have a representative group of the overall market, as well as a couple of the different sectors. So of course you have tech, communications, discretionary, industrials, so on and so forth. And so these are my favorites to trade within those spaces, and looking at all of them at the same time just gives me an idea of what the market's doing that day and which sector I want to jump on and focus on that week. So the next part of the Phoenix Folio is the millennials buy it or the millennials love it list. Either way, it's, call it both. But millennials, I mean, we spend a lot of money on entertainment, online shopping, e-commerce is huge, travel, coffee, used vehicles. And so you have to think about that and say, okay, well, what does that mean for our portfolio? What does that mean for different picks that we can potentially look at because of the way the generations are shifting and adjusting where they spend their money? So here are a couple stocks from my millennials list. And if you just go through this list, it's important to understand that I don't just buy and hold all of them at the same time. As an options trader, what I do is I maintain this list, and then when they pull back and when they consolidate, that is where I will get in for an overall breakout. So a couple of these, PayPal, this is huge, payment processors. Obviously there's Venmo, Venmo's growing. Etsy is one of my favorites. Etsy and e-commerce as a whole is huge with millennials. Freshpet, I think this is funny because, I mean, statistically, millennials do spend a lot of money on their pets, and especially natural food, organic food, and Freshpet. This company makes refrigerated dog food that's natural. And if you look at a stock chart, it's really nice, beautiful trend. It's about $45 or so. So I do actually own that one, but I like to trade it in the options market. And I'm not going to spend time going through all of these, but it's just the overall theme that I look at, and then I narrow that down to what the technicals of this chart actually looks like, and then look at the fundamentals as well.
I see Starbucks on your list, so that means I must be a millennial.
Yes, Starbucks is a great one. It's very strong within the consumer discretionary area. And then, of course, coffee is great.
Yeah, that's a no-brainer for sure. There were a couple questions that came in. One was, what time frame are you using when you're reviewing sector results? I think you were talking about, trying to differentiate between the strength and the weakness. And so when you do that, are you just looking at the last week? You're looking at a month, a year? How far are you going back?
So typically the largest time frame that I use is a daily, just because I'm a shorter term trader. Usually my trades will last maximum 3 weeks at a time. So primarily I use the daily chart, and then I go down to the 30 and 78-minute charts to determine when there's a major shift in pattern or for an entry.
Okay. Another question or a statement. With options, I never feel comfortable that I am not overpaying, since the volume of trades on an option can be low. So they're wondering your thoughts on that comment.
Definitely. So, the main way that I determine how much I'm going to pay for something is dependent on the overall market condition, where that individual ticker is trading. So for example, in the options market, I always want to get an entry around the 34 EMA on a daily chart. Typically, if you're getting into a trade when the ticker's extended off of the 8 EMA, then you're paying too much, because my stop is always going to be below the 50. And so if you buy it when it's extended up off the 8 EMA, then your risk area is much, much larger. And so for me, that's paying too much. It's also easier if you can do it after a down day, 2 down days, then you're going to get a much better price rather than when something's going bid. I also won't buy something if it's up more than 2% on the day.
Okay. One other question that just came in, and I don't know, this one might be difficult to answer in a short period of time, but the question is, what option strategy do you use most, from long calls, puts, call vertical, strangles? And then the follow-up question was, can you walk us through one of your setups? But at least maybe the first question, if you could answer, do you normally trade on the long side, just long calls?
Sure. So that is actually, I have a couple slides on that at the end of the presentation.
Okay.
Where I do have an example as well. But just to answer quickly, it depends on the overall market conditions. So when the market is strong to the upside, only long calls usually, because that's the best way that you can make money. But when the market is a little bit more volatile, like it's been for the past 6 weeks or so, especially with the overall macro backdrop, lots of tweets, everything like that, then I stick with more conservative strategies, spreads, and butterflies.
Okay.
So this was a group that you were talking about earlier: semiconductors, cloud kings, cybersecurity. These are all some of my favorite areas to focus on when the market is just flying, because those are the ones that they're the ones that are flying as well. So the next piece of this is just looking at the cloud and the way that technology is shifting. Everything is shifting to the cloud. It's not going away anytime soon. And looking at this chart, you can see the way that it's projected to continue growing. But at the same time, that doesn't mean that every single cloud stock is a good pick. So here are some of my favorites from, I think this was last week, but they're still some of my favorites. And in the options market, I love to buy them whenever we get a pullback. And then I also hold long stock in all of those as well. The next area that I'm looking at, and I think I need to come up with a better name for this, but it's essentially looking at the debt bubble. So right now we have some of the highest levels of consumer debt that we've ever had on record. There's mortgage debt, there's auto loan debt, there's student debt, there's credit card debt. And so you have to think about that and say, okay, who's making money off of this? Well, in the age of e-commerce, you can't pay with cash. If you look at a chart of MasterCard, Visa, American Express, those are just continuing to expand, and I don't think it's going to stop anytime soon. A couple other ones that aren't exactly in the same space, but you have companies like PayC, PayX, you have online payment processors. Also, companies are going to I don't know what you call them, but they're online management systems where your paychecks are getting managed online, your health insurance is getting managed online. We use ADP at our company, but I mean, if you look at the stock charts of those, they're doing amazing. So that's the next area that I like to focus on. And this is really where we get into some examples. So essentially, I start with my list. I have about 15 different lists. Those are just some of my favorites that I wanted to highlight. And then what I do is I use those for a watch list and then narrow them down to get into actual trades. So this is what we call a setup. Really just looking for a technical entry point that will provide a good entry. So as far as comparing these stocks, what I do is I compare the strength of the trend, and then I compare those stocks against each other, because what you're trying to do is you're trying to pick the strongest of the bunch. So even though I have 15 cloud stocks on my list, I want to find the one that is the strongest out of that list. And so this is essentially the tool that I have created to do that for me. I can still do the process manually as well, but this just is much quicker. So really all that it is I'm looking at the strength of the trend, which is determined by the moving averages. So whenever you have stacked moving averages, this is the 8, 21, 34, 50, and then I have the 100 and the 200 as well. So whenever you have stacked moving averages and then you have price above your moving averages, that's indicative of a strong trend. And so what this does is it just takes right here, the candles are green, because you have stacked moving averages, you have price above the moving averages, and then it also looks at the alignment of the moving averages as well. So the green is telling you that you have a strong bullish trend. And then what happens is as the price starts to pull back, you get the warning sign, which is the yellow candle telling you, hey, there's a shift coming. And then the red is indicative of a pullback, or sometimes you'll see a shift into a bearish trend. But on this chart in particular, it's just a pullback. So I like to use the 78-minute chart to identify pullbacks. And then this is my Cloud Kings list. And so what you're doing is you're just pulling this data and populating it all down here for all of these charts at the same time. So then that way you can see the way that the trend is shifting on a technical basis on multiple stocks at the same time. So whenever you get a market pullback, you say, okay, well, the SPX is pulling back. I know I want to buy a cloud stock because the market's strong, but I want to buy the one that really only lost a little bit of strength and then rallies, because that is the Phoenix. And so when you look at the list, you can say, okay, well, now is really strong. RHT, that screenshot was from a little bit ago, but same thing with VMware and WDay. And then I also like Adobe. And so really, this is just a comparison grid, and then I go down to the individual stock chart for my actual entry. But here's just another example as well. This is the Grandma Loves It list. And so just looking at this real quick, I mean, you can see the SPX is pulling back. Okay, everything's pulling back. So what is still strong? What is still maintaining a strong technical trend? You've got O'Reilly, American Express, and actually Coke right there. And so then I just go down to this individual chart and look for an entry on a pullback buy. Here's just one more list, same thing. You can see the overall pullbacks, and then you can see the rally. And then I go down to the individual charts. So cyber, this is one of my favorites on the cybersecurity list. And I can see the strength of the trend within the tool, and then I come back to my actual chart to look for an entry point. So that right there is the overall process. I start with a Phoenix folio. I look to identify the flyer, which is just the one that is starting to rise after you get one of those market pullbacks, check my technicals for a setup, and then I trade it. So I know I'm running a little bit short on time, but this is the part where I get into the trading setup. So I'll just go through some of these examples a little bit more quickly so that I can get to the options part. But here are just some of my favorite Phoenix stocks. And like I said, I just look for the shifting of the pattern on the lower time frame for entries. So Adobe, like you were talking about earlier, looking forward to Adobe's earnings. Got PayPal on that list as well. So essentially, I mean, in the options market, every single one of these pullbacks are great opportunities. And then regarding your question earlier, what do I like to do? Long calls, butterflies, spreads. So essentially on pullbacks, I love selling put credit spreads, premium here, here, here. So I like to do it around the 34 EMA. And then in a market situation that's a nice directional trend like this is completely fine for buying long calls. That is great right there. Something like this in this type of price movement, that is when I would stick with butterflies because they're cheaper and they maintain their value better through volatility. But in something like this is long calls. So you can do the same thing with this chart. Whenever you have price that's below the moving averages like this, it just tells me that I need to be a little bit more cautious. And during this area right here, this is completely fine for long calls. Put credit spreads on the pullbacks to the 34 EMA.
Where would you set your stop on something like that? When you see it in an uptrend like that, is it one of your moving averages or is it a prior price support level? What do you look for as a sign to, hey, I need to cut my losses here?
Yeah, so usually I use the 50 period simple on the daily chart, and then sometimes I'll couple that with the previous low as well. So for example, right here on AXP, if I did want to get into it right now, which I wouldn't because it's all the way up at the 8 EMA, so that's a pretty aggressive entry. But I would have to have my stop below the 50. And since this previous low is right there, I would actually let it go until about here. So that's why in the options market, I was saying when someone said, hey, how do you know if you're paying too much? Well, the thing is that if you're buying a long call right here and your stop is all the way down at 108, that is far too much risk to take in the options market because you are basically let's see. So you want to minimize your risk as much as possible, right? Because options are so expensive and volatile at times. So if you get in right about here, right about where your stop is, then your risk is actually quite small and the stock is going to move on a normal basis in that area. So the problem is that if you get in at the 8 EMA and it reverts back down to the 50, that's just a normal move for the stock. And there's no reason for you to stop yourself out. But because if you bought, a $10 option up here and it goes down to $2 down here, then obviously you're probably going to panic on that. Well, we try not to, but so that's why you really have to work on your entry.
Okay. And you mentioned Adobe earlier and earnings coming up. If you see relative strength on an intraday basis or leading up to the earnings report, does that give you the confidence to place a trade heading into, would you hold options going into earnings or is that too risky?
So we never advocate holding long calls through earnings because of the vol crush. So the way that options function is the IV of the options is a huge piece of the actual pricing of the option. And so the IV rises going into the earnings report. And then what happens is after the earnings report is over, the IV gets crushed, or we call it the vol crush. And so the price of your option is going to go down unless you have a huge move like that MDB move that we were talking about earlier. So typically when I trade options, for an earnings report, what I do is I sell premium because I want to take advantage of that vol crush. And then the other piece of that too is, and this is the presentation that I used the last time when I was on StockCharts TV, but I always trade the run into earnings. This is one of my most profitable times in the options market every quarter, is trading the run and then getting out before the report.
Okay, so as taking advantage really of that increasing volatility.
Yes. So if you look at relative strength names, and usually I'll look to buy them about 2 to 3 weeks in advance of the earnings report. And then if you time that with a pullback, like I was explaining on the other charts, then you get a rise in price plus a rise in IV. And so it's working in your favor times 2.
Okay, cool.
So the last piece of this is just talking about the different ways and the different option strategies that I like to use, as well as, stocks and ETFs. So I do maintain a long-term stock and ETF portfolio, and then I have a directional options account. And so when I'm typically trading options, usually I will stick with Delta 70 calls. What that is just basically an in-the-money call. And those will hold their value the best as the market is trading back and forth. You can also buy cheaper ones that are out of the money, Delta 40, Delta 30. Usually the only time that we do that is the run into earnings, because you have a price and IV increase working in your favor. But for the most part, I stick with Delta 70 calls, butterflies, and spreads. So here's just a couple comparisons. But I mean, basically the entire reason why I use options is for the leverage. It's for the leverage, and then it's also because you can define an exact amount of risk, particularly with some butterflies or spreads. I mean, you can trade pretty small and be able to focus on, normally I focus on 1-to-1 risk reward, or with a fly, I mean, you're risking 1 to make up to 4. So for me, that's a pretty good way to use leverage. And here are just a couple of examples of option strategies that I will use. So one positive thing about the options market is that you can just trade neutral moves, especially in a week like this week, options expiration. We do primarily focus on neutral moves. And the way that we do this is you're able to sell premium right about here in the middle. I could show you an example of my Netflix trade if you wanted, but as the market is kind of just chopping back and forth, you are able to take advantage of that in the options market. For me, I like a little bit more excitement in my life, so I primarily focus on directional trades, breakouts, stuff like that. So long calls, debit spreads, credit spreads, butterflies, and unbalanced butterflies. And then you're just determining this based on the risk. So if I had a little graph right here, these are going to be the most risky, kind of a medium, lower risk, and butterflies are pretty low risk. So, and then here's just a little bit more information about my favorite directional strategies. Is that the answer to the question that someone was asking earlier?
Yeah, I think it certainly is addressing it. I think as far as, I think the one question was, which types of option strategies you use, which I think is addressing that question. The other was walking through your setups, and I think you did that on a number of.
Oh yeah, and I can go to my live charts too.
Yeah, I do have one question though, if you're done.
Yeah.
And by the way, this was a great presentation. I think we don't really talk too much about options here on Market Watchers Live, so it's always a pleasure to have you on the show.
Thank you.
Help educate me and a lot of our viewers as well. But I want to show you a chart, and it's a seasonality chart. of the volatility index. And I don't know if you can guess what I'm going to show you, but I'm looking at the volatility index, and looking back over the last 20 years, you can see that the average increase in the volatility index goes up throughout the summer months, which makes sense because that's normally when the market has a tendency to pull back. And as the market sells off, volatility moves higher. So my question is, as you enter the summer months, knowing that the market has this seasonal tendency for the volatility to move higher, which is going to make options more expensive, do you do anything differently in your options trading during the summer months? Do you slow down at all? Do you find that the higher volatility is an issue in your trading?
So in higher volatility environments, the best thing to do is to sell more premium. And so with those directional charts that I was looking at, it provides a great opportunity every market pullback to just sell premium, sell premium, sell premium, because when the volatility is higher, you can sell it for a higher price. So it's quite beneficial in that type of strategy.
Okay, that's a good answer. I mean, I know that the volatility is always higher in the summer, and it just seems like because options are priced based on that volatility and that higher volatility, that there would be options or option strategies that maybe would be designed to take advantage of that higher volatility, just like you talked about playing those trades into earnings, because you know that IV is going to rise, and so you're actually taking advantage of it as it rises. So that would make sense as well with the volatility.
Oh, definitely. And I mean, that's helpful for a butterfly as well, because with a butterfly, you have multiple different strikes and you're selling more. Let's see, should I take the screen share back or?
Sure. You got it. Maybe one last 30-second chart. How's that?
Oh, sure. All right. We're good?
Yes.
So for example, with a butterfly in a high volatility environment, what you're doing, and this is a Lulu lemon trade. This was an after earnings trade as well, because Lulu typically climbs higher after earnings. I was buying the 175 strike and then selling 4 of the 185s. And so in that example, as long as Lulu stays below the 185, what you have is premium that's just decaying from this 185 strike. And when you can sell it for a higher price, then you can make a little bit more money on that end. So it takes quite a bit of time to thoroughly explain the way that butterflies function. But I mean, the key purpose here is just that you can buy it for a pretty low price. That was $1.52, and then sell it for, this was $5.17 in this example. So you're typically looking at about a 1 to 4 risk reward situation, and you can do those pretty cheap. So.
Okay, well, I think maybe that would be a good topic when you come back, because we'd certainly love to have you back. We enjoy your options presentation, your strategies, your teaching method, and all is awesome. So can't wait.
Thank you.
Yeah.
Well, here's just my last slide for you, just about where to find me. I'm from Simpler Trading. I have a newsletter, classes, and we also have memberships as well. So.
All right. Check it out. There it is on your screen, and you can always come back and check out the recording later. But Danielle, always a pleasure to have you on the show. Can't wait to have you back.
Thank you.
All right. And there
Excellent.
she goes. And we are going to jump right in, Erin, to the 10 in 10.
You betcha.
So I think the first one that we talked about was
Twilio.
You're right. Let me go ahead and get it set up for us. Okay.
Yeah, it was interesting today. The RRG had only 2 stocks traveling in the northeast direction. So I'll be sure and add those.
It sounds like a plan. All right, Twilio, first of all, it's in the software space, and it's been one of the leaders, and you can easily see that with these relative charts that I have laid underneath the price chart. But here's a move up. I think we're just sideways consolidating. So you might see a little bit of relative weakness here just over the last couple of weeks. but this is a really solid stock. Not every stock's going to break out the same time. I think Twilio looks really good. I'd be looking for another breakout soon.
All right, and the most popular in the chat room is YRI.TO, and that's the Yamana Gold Toronto Exchange.
All right, let's take a look. I need to put this on the other chart. All right, I do like the breakout here, and I have to say, we've been talking about it a lot lately, but the dollar is set up, in my opinion, to go lower in the near term. I have talked a lot more about being more bullish gold. I'm not long-term bullish, but I am short-term bullish. And I think that today's breakout here above the 50-day moving average, price resistance, this to me looks like a little bit of a bottoming head and shoulder pattern, left shoulder, neckline, head, right side of the neckline, right shoulder, and now a breakout, volume starting to pick up here, going through the center line. This would actually measure up to about 340, so maybe up into this range. I think we're probably going to be looking at a little bit more short-term strength here in gold and more specifically on Yamana.
All right. I love this chart. SCCO, Southern Copper. PMO just went positive, looks like a flag, has a breakout, 20s crossing the 50.
Yeah, and I think it kind of lines up again with the dollar faltering of late, just looking weak, looking like it wants to go lower, and then this being in that material space, which has come to life. It's probably been as strong on a relative basis as any time probably in 2019 at least. And so here you are getting a nice little breakout here after breaking down below the 50-day and some price support to open May. You can see that the recovery attempts have struggled right around $38. Today we're getting that breakout, so I would agree with you. I think this one looks pretty good here in the short term. All right, you got another?
Next up is Square.
Okay. Yeah, Square is beginning to show a little bit more relative strength. I think when I looked last time, it's coming off the bottom here against the financial administration stocks. So it could be gathering steam. I've kind of been off of Square for a while, not really too excited by it. I think that I would be looking at two things if I was investing or looking to invest here in Square. First of all, you got gap resistance. Big gap down in May occurred from about $73, and that's right where we are right now, trying to get through. So I think this is a real risky area to try to get long on Square, but it is trading above its 20-day moving average. So what I would do is I'd watch that gap resistance. A break above would be bullish, or on a pullback as it gets closer to these moving averages, I think that would be the better reward to risk entry if you can get in there.
All right, this one looks interesting. It's in software. I would expect it to be doing better, but Domo, what do you think?
Yeah, Domo, I think, is one that had broken down below some price support, and it definitely had lost its relative luster. And so as you see this begin to trek lower on a relative basis, that doesn't make me feel very good because, like you said, software is doing better, trying to make a breakout. And look what this stock is doing relative to software and even on an absolute basis, going down. I'll go ahead and delete that line, but just so I can show you these failures at the 20-day moving average. Today is another failure at the 20-day. We're getting a pretty good day in software, and yet this stock is down 2 cents, unable to break through its 20-day moving average, just showing very poor leadership. Lack of leadership, I should say. So I'm not a fan here. I think that there are others that look better.
All right. How about, we looked at Domo. How about Momo? Same space and software.
Yeah, Momo we talked about on the scooter mover of the day. So I really like the stock. I'd like to see us continue this move to the upside and confirm that breakout right there above the 50-day and price resistance around that 32.50 area.
All right. That one was a quickie for sure. Financial space, EFC, Ellington Financial. They're a mortgage finance company.
All right. Generally pretty light volume. Lately, it's been a little bit heavier, but I do like the chart. The group has been very strong, mortgage finance. The stock relative to the group has been down, though, which tells me to be careful if it breaks down. So I think we've got a nice breakout here. I think the stock still looks pretty good. You've got the rising 20-day, which has been holding on pullbacks. So I think I would continue to kind of focus right in here. Oops. That is not what I wanted. Grab the wrong thing there. All right, so there you've got the 20-day test. Here you've got the 20-day test. So I think as long as that 20 continues to hold them okay, maybe a little bit of nervousness, cautiousness, if you will, because of the relatively light volume, though.
Okay, how about a biotech up next? Acadia Pharmaceuticals, ACAD.
All right. Well, biotechs are trying to come back to life here. I really liked the move yesterday, continuing today. I actually see off of an uptrend. I like this one. I think this one looks pretty good on a relative basis. You can see it's been one of the leaders. And what I really like about it is that it is sitting off of an uptrend in what appears to me to be a symmetrical triangle. So if you go down here, you can kind of see those highs, also these lows. I think we're squeezing in this triangle. I'd look for a little bit of heavy volume breakout. Volume has been picking up. I think a close over 26 here would be an interesting development, bullish development for Acadia.
Okay, next one was the only one traveling in the northeast direction, and in the leading category, Shopify.
Yeah, Shopify I own. It is in the software space. Down today, but it's certainly been one of the leaders, so we got to give it a little bit of leeway. I'd like for it to go up every day since I own it, but it is hard sometimes to be patient on a day like today when the market's doing its thing. But I do think looking back and setting some perspective here really helps. This is a stock that clearly is one of the leaders in software. So I would expect, even in a bad market, you can see that the latest breakout was 280. I would say that level probably holds, if not the 20-day moving average, which you can see has had multiple tests. So I like Shopify, and again, full disclosure, I own it. One more.
Ionis Pharmaceuticals, IONS.
All right. This one needs to get through the 20. I actually saw this one come up recently. This is a stock that also I think could be a very interesting trade from that level on this heavy volume move to the upside, and then the breakout before it right there. I think this is pretty key support. I also believe there's a positive divergence. I don't have the PPO up here, but you've got lower prices. I think the PPO is higher. I want to see a break through the 20. If we can get through the 20, I think the next step is going to be up at $70, test that 50-day moving average.
All right, that is it. That completes our 10 in 10. Here are those symbols. I'll have those up in the MarketWatchers Live chart list. Just go to the Articles tab, click on the MarketWatchers Live blog, and the link is right there at the top. We'll be right back with the final market update.
Missed the live show? Want to rewatch a workshop? Tune into the StockCharts TV YouTube channel to catch up on the latest programming and content. All of our live shows, workshops, special guests, and more can be found there. Each category has its own playlist, so it's easy to locate. We even have chart school and creative strategy videos to help you become a better technical trader. Leave comments for our commentators, like your favorite videos, and don't forget to subscribe to our YouTube channel.
All right, it is time for our final market update. Market's still doing quite well, but you can see the intraday highs have now been set, and we are pulling back just slightly. Dow is up about 308 points, S&P 500 up a little over 26 points, but yes, pulling back. NASDAQ continuing to fly higher, up 106.66 points. New York Stock Exchange is also flying higher. It is up 1.46%. Russell 2000 also hitting intraday highs and pulling back, but still up about 1% on the day. TSX, following the markets here, hit the intraday high and looks like it's going to consolidate sideways a little while longer. TNX Treasury yields are down 2.061% is the current reading. And the VIX actually is starting to rise just a little bit from this morning, reading 1553. UP up 2 cents. GLD also up on the day, 74 cents. USO forming a flag, and we can see that TLT is also up, but pulling back about half the gains earlier today. And finally, as far as our sector winners, losers, there are only 2 losers today, and that would be utilities and consumer staples. Well, I suppose you could throw real estate in there as well. All 3 in the negative. The rest of our sectors are higher with technology leading.
All right, as far as the NASDAQ goes, you can see here that once we went below that 20 and 50 week moving average, this is long-term chart, we did hold those March lows, which was really important. Put in that bullish engulfing candle to open June, and we have now been moving up. We do need to get back up to about 81.76. That's the all-time high on the NASDAQ, but it certainly seems like we are on that path to the upside. Volume pretty heavy and nice over the last couple of weeks. A little unusual for the month of June, as we start the summer, but things looking pretty good. All right, we are going to go into our final segment, or actually one of our two final segments, the first of which is Inside the Lines. This is a segment where we just simply take a look at a stock or a group of stocks and look at the charts. We're looking inside the lines of the charts to tell you what we think we are seeing on the charts. So, Erin, what do you have for Inside the Lines?
All right, well, I'm going to go ahead and look at the Paris Air Show is happening right now. And I know we've heard a little bit of information about Boeing and about Airbus. So I thought it would be interesting to look at that aerospace index and then follow it up with a quick peek at what's going on inside the lines as far as Boeing and Airbus. Airbus, it looked like was going to be the winner on the winner with the most orders yesterday, but Boeing is catching up, and both companies are doing quite well. As far as what we're seeing on the stock chart, I actually can see a reverse head and shoulders here, and it's coming in off of this decline. There's your head, there is your other shoulder, and check this out. It is actually beginning to execute this particular pattern. It does have an upsloping neckline there. So we're not quite there, but we are getting ready to break out. Notice we also have a bottom above the signal line on the aerospace index. So as far as the index itself goes, if this pattern does fulfill, we're looking at a move certainly above the overhead resistance here in May. All right, next one I want to look at then is Boeing. So let's go ahead and take a peek at that one. All righty. And there you go. You're going to see similar patterns, right? Because they are in the same index. So there you go. We have the same head and shoulders going on here. Reverse, shoulder, and then let's get a neckline in there. We'll put that right about here. And as you can see, we've got a full breakout now for Boeing above that to execute that pattern. We also can see an oversold PMO buy signal going on. So really nice breakout. It is up over 4.25%. I would look for it to maybe pull back a little bit before continuing up toward the target, which will put it really pretty much right on that April high. So I think Boeing is looking pretty good here. It's been a little bit rocky since all of their news that came through earlier back in March. And then finally, the last one I'm going to look at is Airbus. There we go. I always forget this symbol, so I want to make sure I have the right one. Oops, of course, there we go. EADS1. There we go. Airbus. Different chart, right? We've got the PMO buy signal. It's been in for quite a while. Let me look at this on a weekly chart real quick, and I'll pass it along to you, Tom. But you can see really nice breakout right now for Airbus. We have the top above the signal line. So I'm liking Airbus. Certainly, I think it's relatively stronger than Boeing, but both looking pretty good on their sales from the Paris Air Show.
All right, I'm going to go ahead and take everything in a little different direction and talk a little bit about cryptocurrency because these stocks all have some kind of tie to the cryptocurrency area. Actually, before I even get into Facebook, let's pull up Bitcoin. Oops, let me see if I can get it here. Oh, GBTC, that's what I'm missing. Yeah, I think with Bitcoin, first of all, we had an interesting panel discussion, Erin. You were a part of it with Dave Keller. not too long ago. And Bitcoin has certainly got its momentum going here over the past few months. You can see trying to break out above that late May high, failed. We're pulling back. I see a move up, a cup, and I think we could potentially be putting in a handle with this pullback. But with the Bitcoin mania perhaps picking back up again, where do we go? Well, Facebook came out and they unveiled a consortium to create an open source digital currency called Libra, which is set to launch in the first half of next year. And that would allow consumers to send money around the world easily and for free. And so that's some of this hype that's been going in Facebook recently, I think was leading up to this announcement, this white paper. And the stock didn't make the breakout yet, but it has been in an uptrend. And I think if we look at the relative strength, you'll see that this has become now one of the best stocks in the internet space. It broke out again on a relative basis. So while you can see internet's quite a bit off of that April high, Facebook getting close earlier today to the high it saw back in April. So that's certainly one stock that we're going to watch pretty closely, with regard to cryptocurrency. Some of these others you may not be aware of, though. One is AMD, Advanced Micro Devices. Its Radeon graphics cards are preferred by cryptocurrency miners because they offer superior hashing performance to those produced by NVIDIA and potentially others. And so with the announcement on Facebook today, we are getting a little bit of a pop in AMD. I think this is being lifted perhaps by cryptocurrency, but also just the general push to the upside in the semiconductor space today. Another stock, and I'd be maybe a little leery of this one because it just hasn't been trading as much, but IBM launched an open source collaboration initiative called Hyperledger that hopes to expand the use of the blockchain in all industries. And last time I looked, there were over 130 member companies of that. So they do have that underway. My big problem is on a relative basis, I still don't think IBM is performing very well. So you might keep that news in the back of your mind, but otherwise not really one of the better performers. Overstock.com, OSTK, also not performing well, but it has a division that's been working on blockchain technologies for a few years. So one to maybe watch if it begins to show relative strength. Square, which was mentioned earlier, they're looking to become the first established payment processing company to fully integrate Bitcoin technology into their payments platform. So looking at the stock, though, again, it is starting to show a little bit of relative strength. I would just watch that rising 20-day moving average. The last one, Microsoft. They're hoping to offer the first mainstream blockchain solution to enterprise businesses. And as a result of being in a software group, and then perhaps because of some of these blockchain opportunities, Microsoft has been performing very well. And you can see on a relative basis, it is one of the leaders in the software space. So that is our, here's our update and summary. There we go. I'll get the word out. There's our summary for Inside the Lines. And we're going to move on now to our final segment. With the market having such a huge day today, it would seem to make sense that maybe we could find some breakouts out there, Erin. So what do you have for chart breakouts today?
All right. I ran a scan. I don't have time to really go through it for you guys, but it's my chart breakout scan, and you should be able to find that somewhere in one of my articles. But here are the ones that looked the most interesting to me as far as breakouts go. CWST. Let's move over here quickly. See, you've got the beautiful breakout here. Notice the PMO is turning back up. I would be a little concerned. We've seen this same action come off of a PMO bottom, but notice this time we're getting a really nice strong breakout accompanied by some really nice looking volume here. So I like the look of Casella Waste Systems and Cryoports, the next one up with a breakout. This one is really a breakout from a symmetrical triangle right here. I didn't annotate that, but we are getting that breakout from that declining tops trend, and the PMO is turning up. You know, again, you get a little bit of stops and starts and twitches here, but I like the fact that you're getting the breakout and the PMO is turning up. And look at the OBV, really nice look on the OBV, confirming this nice price rise that we're seeing, and current breakout on Cryoport. Enphase Energy is one I know we look at quite a bit, getting ready to have a PMO buy signal. As you can see, great breakout today, continuing the trend. I just, this is getting a little bit too frantic, parabolic. And so I would be very careful here with end phase on that breakout. Foundation building materials, nice breakout there from overhead resistance, PMO turning up. SAP, same thing now. We've got a nice breakout short term above the 130 level. It was pretty much a trading channel here, I would say. And now we're getting that breakout accompanied by a PMO turning back up. And then finally, my last one was Solar Edge. And I talked about this one a little bit earlier. It was upgraded today, and a nice breakout on that upgrade. Again, PMO turning up. And I like this OBV making that rise. So breakouts are great. Probably want to wait for those pullbacks. So if you want to get in.
Okay, we got a couple more stocks to take a look at. I'm going to start with a electronic equipment company, which is Trimble, TRMB, Trimble Inc. And when you look at the stock, it hasn't quite made the breakout above that September high, but it is trying to make a breakout above this double top. And what I see off of this move to the upside is a cup. So even though we're not necessarily moving to a 52-week high, breakout can come in a lot of different shapes and sizes. And in this case, I think what we're looking at potentially today is a cup handle breakout. I would just say this: volume has not been great. And normally when you're getting some kind of a pattern breakout, at least for me, I like to see volume confirm that move to the upside. So maybe hold off a little bit here. But this one I wanted to point out because it has been very strong relative to the electronic equipment group, and it's been outperforming the S&P 500, even though its peer group has been absolutely on, being punished really to the downside. So this went through about a 4 or 5 week period here where the group badly underperformed the S&P 500. We're starting to see a little bit of relative strength, a bounce back here in the group. And throughout all of that, you can see Trimble held on pretty well to its relative strength. So I think this is a stock definitely to keep an eye on. A breakout above $44, especially if that volume starts to pick up, would be a great sign. And it wouldn't hurt if its overall group, the electronic equipment group, begins to show more relative strength versus the S&P 500. The next four that I'm going to take a look at are all in the software space. I know, semis are having a big day and renewable energy is having a big day, but we've talked a lot about those two groups. So I wanted to focus on one of the strongest areas of the market and looking at some of the individual stocks that have been performing really well, trying to make breakouts today. ServiceNow, I believe Danielle Shay mentioned this one earlier. Really nice move to the upside. Volume is picking up. So let's see if we get that breakout. Now, I do want to offer up a warning here. When you get a false breakout like this, if you get that tail up there and we come back down, close back below 280 today, that could be a short-term top. I don't think it's a long-term top because this is a stock that remains in favor relative to software, relative to the S&P. It's been a great relative performer. I think it eventually goes higher, but short-term, a failed breakout could be a bit of a negative, but right now it is in breakout mode. Rapid7, RPD. Now, this one, when you look at the relative strength, it seems like maybe it's been struggling, but it had such strong relative strength versus software for 4 or 5 months, dating back to November of 2018 through the early part of April 2019. Since then, we have just been sideways consolidating. This is one that I think is just on breakout watch. If it can consolidate for 3 or 4 months, make a breakout, we could see a really big move. Here, after moving up, we actually downtrended for a while, but once we made that breakout, we were off to the races. QTWO, Q2 Holdings, another one that consolidated here for a period of time. Yesterday made the breakout. Look at the volume pickup on that move to the upside. So I think this one is in breakout mode. When you go down, look at it relative to the software group, it's been on fire the past couple of weeks. And again, the group is threatening to break out. The stock is making a breakout. The relative strength has been there. So I suspect we're going to see additional gains here. And then the last one I have is 5-9. Ticker symbol is 5, F-I-V-E. Now, this one you might say, well, there's no breakout. well, breakouts again come in different shapes and sizes. I'm looking at this one. If we could get through the 50-day moving average, that would be a very, very bullish move here on this stock. It has been underperforming. Oh, I said this was software. This is actually specialty retail. My bad. But five, I think I may have, I think it might have been FIVN that I wanted. It was FIVN. I'm sorry about that. But FIVN, this is in the software space. When I looked at the chart, I knew I hadn't looked at that one. But this, again, is a different kind of a breakout. But off of the uptrend that it saw in the first quarter of 2019, you can see a little bit of a wedge maybe forming by connecting these highs. We broke out above that yesterday, and today we're moving up even higher, although we have pulled back off the earlier high. I would watch this relative downtrend line, because if this stock goes back up later today near the high, I think that is a breakout of this downtrend, the channel. And if we can get a relative move back up above this downtrend line, I think that could be a 1-2 punch for 59 Inc., which is ticker symbol FIVN, not to be confused with FIVE. But let's go ahead and pull up the summary there. And these were the stocks that we just talked about, discussed. And I deliberately avoided talking about semiconductor stocks there, Erin. And I don't think you had any there either.
Nope.
We have a poll today that is talking about a number of semiconductor stocks that are really benefiting today, or at least they were before the show. I think some of them may have pulled back a little bit. But looking at this group, the question to our audience was, which of today's semiconductor leaders would you buy for long-term investment more than 1 year? I was thinking in my head that Advanced Micro was going to be the pick, and it is the pick. But do you have any thoughts here? Which one of these stocks would you be interested in?
Absolutely. Well, I agree with the audience. I mean, if you look at the weekly charts, AMD has the best one of all of these. And then because we made it a long-term investment, I usually like to pay attention to dividends. And honestly, if you look at the dividends, Broadcom is the best pick at 8.8. And so I would have to say that if I were going to be long-term in something, I thought the Broadcom chart looked okay. So, I mean, it's not great on a weekly, but it's certainly good enough. Let me go ahead and I'll share that with you. There we are. So we are on a PMO sell signal. These are weekly charts, but I still think it looks pretty strong. It's holding the 260 level, which has been that level, where it's had to find that support. But yeah, look at the AMD chart though, Tom. It's pretty different. Of all of them, they're the only ones that have challenged and actually come across with a new high from 2018. They beat it out just barely intra-week. But I've got the PMO on the right side of everything going on. And actually, the third one I put on was Lam Research. I don't think the chart looks, great. Certainly, you don't want to get in necessarily when the PMO is on a sell signal on a weekly chart. But again, looking at the dividend here, I thought that that one looked pretty good.
Yeah, I would simply say, looking at a couple of these charts quickly, Xilinx, I agree. I think this one's in a nice uptrend. It got way ahead of itself. I think the stock pulled back pretty dramatically, but I still believe long-term we're in this uptrend. So Xilinx would be one for me. I think also AMD, I would agree. I think those are two that I really like the best on this list. The two that don't look so good to me right now, have a little bit of work to do technically, would be NVIDIA and Micron. I think
Same two I had.
Yep. I'm just not big fan there. So, all right. Well, we are back again to the end of another show. Unbelievable. I do want to thank Danielle Shay for stopping by. Always great to have Danielle on the show because, again, we don't really take a look too much at options. So thanks, Danielle. And thanks to all of you for being with us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everybody. We'll see you back here tomorrow. Tomorrow is Fed Day, by the way. Happy trading.